likely he would fire the Fed chair. He would love for him to resign. The president has repeatedly attacked Jerome Powell for not lowering interest rates. In recent days, Mr. Trump has also suggested a $2.5 billion renovation of the Federal Reserve buildings could be grounds for dismissal.
This is a good use of taxpayers' time to look into this project that is millions and millions of dollars over budget. It's for a big, beautiful mansion for the federal chairman, reserve chairman. It's completely unnecessary. It's overpriced. And I think it's a good thing the administration, led by the president, is looking into it.
Well, investors seem convinced that Donald Trump won't follow through on his threats of firing the Fed chair. The Dow Jones today edging higher as stocks remain near record highs. But lawmakers from both sides of the aisle are warning that should Mr. Trump make the unprecedented decision to remove Jerome Powell, markets would crash.
If you fire the chairman of the Federal Reserve, you will see the stock market crash, and you will see the bond market crash.
You think it'll bring down the U.S. financial markets if he ousts Jay Powell?
Yep, I do. Because he will then be saying that decisions about interest rates in the United States will not be based on the economics, they'll be based on politics.
So what we don't know is would the markets crash if Donald Trump fired Jerome Powell? Because we've been hearing from a lot of politicians there. Let's speak to Paul Donovan, though. He's a global chief economist at UBS Global Wealth Management. Thank you so much for joining us, Paul. So you're the independent voice here. Would the markets crash if Donald Trump tried to remove Jerome Powell?
I think that the international investor base would have two very, very serious concerns. So the first of these, which perhaps doesn't get a lot of airtime, is the question of rule of law. Because as things stand, the US president can't attempt to get rid of the Fed chair. President Johnson investigated doing it, was told in no uncertain terms, no, you can't do this. So if there was a way in which this was engineered, you're raising questions over rule of law. That is not a good thing for the world's reserve currency to be suspected of. The second thing is then the fact that if you are setting up a new Fed chair after Powell, it would be assumed, rightly or wrongly, that that person would be under the political control of President Trump, and that the interest rate decisions would be taken with a view to the political cycle and not the economic cycle. That combination, I think, would do a lot of damage to the bond market because there would be expectations of even higher inflation than is already starting to emerge in the States. And then the higher bond yields would do damage to the equity market as well.
And this matters globally, doesn't it? Because the dollar is the world's reserve currency.
It is. It's the largest reserve currency. There are several reserve currencies, but the dollar is dominant. Now, the dollar has been, we would say, losing some market share. So it's become slightly less significant as a reserve currency. And because global trade is under attack, being a reserve currency is less important than it used to be. But yes, the value of the dollar does matter. And I think if you were to see the credibility and independence of the Federal Reserve being challenged, that would leave a lot of international investors worrying that their money might not be safe in the United States in the future.
Just explain the technicalities here, though, because if Donald Trump does find a way, I mean, there are some lawyers suggesting he could remove the Fed chair. So we're trying to clarify that. But broadly, they're meant to be independent, aren't they? But if he does get someone in that he would represent Donald Trump's view as the Fed chair, there are still checks, aren't they, within the Federal Reserve, which would mean that a Fed chair wouldn't be able to take complete control of, policy.
So this is absolutely correct. And I think that if you were to appoint somebody who was seen as a complete political stooge, absolutely, Donald Trump's person at the Fed, then I think that would be actually not as concerning to markets, because the assumption is that the interest rate setting committee would just ignore the Fed chair and they'd sort of be over in a corner muttering to themselves and no one would pay them any attention. So in that situation, it would then be the other members of the Federal Reserve Open Market Committee, which is the group of people that set rates, that will be taking rates. Now, we have not had a tradition of the Fed chair being outvoted, but if you've got a complete political stooge in there, then I think they would just be ignored. They could do what they liked. No one would pay any attention to them. The risk for me is that we'd get a repeat of what happened under President Nixon, where the Fed chair at the time, a man called Arthur Burns, was not seen as a complete political stooge, but was effectively the president's mouthpiece within the FOMC, and they effectively communicated and led Nixon's strategy, including a very aggressive rate-cutting strategy in the 70s, which led to very high inflation subsequently.
Are there economists that actually agree with Trump, think Jerome Powell's wrong, that rates should fall? What's their thinking?
Well, I would never consider myself to be one of Mr. Powell's greatest fans. I think that economists should be running central banks. But the thing I think at the moment is that because of, in particular, the trade tax policy, the tariff policy, there is enormous uncertainty about what happens with inflation over the course of the next 6 to 12 months and what is going to be happening to growth over the next 6 to 12 months. There is absolutely no point looking at what's happening with inflation right now because we know it's going to go up as we go forwards, as these trade taxes hit the consumer in wave after wave. Some of the trade taxes that are being proposed, the August trade taxes, the consumer's not going to feel those until January of next year, but feel them they will. And that is what the Fed's got to try and grapple with. There's also the uncertainty about the deportations and the impact of that on the labour market. That might be inflationary. It might also weaken growth at the same time. It's a very, very complicated situation. We have unprecedented policy decisions being taken by the federal government. That creates an unprecedented environment. So the wait and see approach is probably the best thing that the Federal Reserve can be doing for the moment.
Paul Donovan, fascinating conversation. Thank you so much for bringing us that.